Investors, I think, were fearful we were being pushed into the abyss of a depression. There's a lot of technical damage that isn't necessarily fixed by just having a one-day rally. So I think that investors are understandably cautious. But one thing that my friend Tom DeMark likes to call is washed out markets.
Yep.
And I think some things really got washed out, and that's what we're going to keep an eye on. I'm kind of in the camp that this is going to extend further. I think markets then have to depend on a policy path from the White House that they can't necessarily depend on. So I think markets are going to put a bigger risk.
But can they depend on it?
Even looking at these revised tariff rates, to me, there's still the ceiling. Do I think stocks are an easy road from here? No, I think it's going to be very challenging. But again, I think so many things got washed out because it is driven by instinct or how close to recession do we get.
So we don't have a handle on the reaction function, as we would say with the Fed. Yeah,
that's right. It's a blunt instrument that we don't know where it strikes.
Wall Street veteran and Bitcoin bull Tom Lee is back, unpacking the chaos in today's market and why it could create a huge opportunity for crypto investors. With rising tariffs, recession rumors, and volatile swings keeping everyone on edge, Lee believes we're on the verge of a major rally, and Bitcoin could be the standout winner. Recently, Bitcoin has behaved more like a traditional risk asset, moving up and down with overall market sentiment. This means if the market bounces back, Bitcoin is likely to surge alongside it. But there's a catch. If uncertainty persists, Bitcoin will probably remain under pressure. Currently, Bitcoin is hovering just above $27,300, up over 15% in the past month. Lee points out that history shows markets often hit their lowest point before major economic events fully play out, so a sharp turnaround might be closer than many expect. Bottom line, Bitcoin's next big move depends on how this market drama unfolds. Let's dive into Tom Lee's latest interview and hear his bold prediction for the days and weeks ahead.
The Fed has made clear during the midst of this that the Fed put, it really isn't in play until they have a better idea of inflation. I mean, we just heard that again. So I think markets then have to depend on fundamentals and then a policy path from the White House that they can't necessarily depend on. So I think markets are going to put a bigger risk.
But can they depend on it? I mean, the White House did make it clear that they would be flexible if things really started to get shaky.
Yes, but at the end of the day, I think companies aren't going to get hit as hard as we initially thought. For instance, even looking at these revised tariff rates, to me, there's still the ceiling. So even if this is what's in place now for 90 days, I think there's a chance things could still improve from there. And of course, it could be better for U.S. companies, and there could be concessions made for U.S. businesses. So do I think stocks, do I think stocks are an easy road from here? No, I think it's going to be very challenging. But again, I think so many things got washed out.
Introducing the all-new Ledger Flex. Your next level crypto wallet is here. Sleek, premium, powerful. The Ledger Flex delivers a solid, high-end feel with smooth edges for a more comfortable grip, and that satisfying nostalgic sound you didn't know you missed. Still clicking away in your old Nano S? It's time to upgrade and lock in your crypto gains with style this bull run. Smooth, modern design, built for serious profit. Click the link below to grab your exclusive Ledger Flex. Ditch the rest, go Ledger Flex.
The outcome was worse than expected because markets were bracing for, maybe some sort of simplified, but, nothing punitive. And then the rates that were announced and the reciprocal were far greater than many expected. So I think today, is not surprisingly a day where the market is now absorbing the shock. We had an opening gap down 3.5%. And from that gap, I mean, we're a little bit lower, but stocks have basically been at the same level. So in a way, I'm not sure I want to characterize it this way, but it's kind of been an orderly sell-off, even though it's been huge. And I think investors then have to sort of, over the next couple of days, process a few things, right? So I think it's a clear signal to me that the White House wants all these other countries to be caught up in essentially a panic and chaos. And then at that point, and this is just my guess, but at maximum pain is when the White House actually then says, okay, let's make a deal. So the stock market, of course, has to sort of process this over the next week or so. And Goldman Sachs put this together. The effective rate of the tariffs is 12.6%. And for all the countries, and on $3.2 trillion of imports. Now, while that number sounds huge, it is basically in line with like what many thought was the worst case scenario, which is around 15%. The second thing I think people should keep in mind is that it's really only 6 or 7 countries that really matter. I mean, there were like 100 countries named, and I know people are probably up in arms because, there's all these like random countries that suddenly seem to have like, penalty rates for their products. But at the end of the day, more than 70% of US imports just come from six places: the EU, Mexico, China, Canada, Japan, and South Korea, Vietnam. In fact, maybe the best way to put it is like there's Mexico, Canada, then there's the EU, and then there's China, and then there's a block of countries, which is Japan, South Korea, Vietnam. Looking at those countries, I think the U.S. is going to do something with Canada, Mexico. I mean, they're exempted from these penalty tariffs anyway, so that it's whatever's going to happen with the USMCA. And with Japan, South Korea, Vietnam, they're essentially allies of the U.S. I don't think that they want to foment a new trade war. But of course, Japan, Korea, and China, we're talking about a tech supply chain, so I think that's going out the window.
Fueled by unwavering enthusiasm for Bitcoin, Tom Lee confidently forecasts explosive growth on the horizon. With BlackRock and numerous other crypto giants already making moves, Lee assures us that a long-anticipated surge is coming as we approach the second quarter of 2025. Now, let's hear Tom Lee explain the impact of the Fed's rate cuts and the current risks facing the market.
It's in the bond market.
And can you rely on it?
Well, it's got a different variation, right? Because it is driven by instinct. So there's not a level that's going to make a difference, or how close to recession do we get? So
we don't have a handle on the reaction function, as we would say with the Fed. Yeah,
that's right. It's like it's a blunt instrument that we don't know where it strikes.
Right.
But at the end of the day, I know U.S. companies are going to be very innovative. I mean, for instance, if they have higher import costs, they're not just going to pay higher import costs. They're going to be very innovative on cutting costs, which just means AI spending should be a lot higher and automation spending. So, I mean, it's actually good for tech over the next 12 months.
We could see a reduction in employment, though, right?
Yeah, I'd say, and that also, again, acts as a stabilizer, because to the extent that Main Street jobs get lost, I'm not sure then we can say that these policies are good for Main Street. But I think it's not going to be a problem to sort of come to some agreement there. And those countries can either choose to negotiate or retaliate or do nothing. And of course, I would expect them not to retaliate, but to either negotiate or do nothing. And of course, I'm sure they're going to negotiate. So really the two regions that are going to be at the center of this is just the EU and China. I mean, I would say that's the only thing that anyone should really be watching. And the EU, I think at the moment, is beating its chest and saying that they're going to be taking retaliatory actions if the US doesn't negotiate. And that's what I think is going to be dominating headlines. And similarly, China, of course, is going to seek to do the same, but China and the U.S. have other things to negotiate as well. So China's hand isn't that weak because, one, China, number one, is a huge supplier to the U.S. Two, China, there are a couple of deals that kind of matter at the moment. One is TikTok and one is the canals, the Panama Canal. And the third is that if the U.S. is going to try to do any onshoring, they're going to need a lot of robots, and the country that's making like all the robots is China. So I think that China and the U.S. China's not going to just not do anything with a 70% tariff rate that they're sitting on, or effectively, I think the math works out with the exclusions like 47% for China, and as far as the EU goes, that's $600 billion of imports. it's $120 billion of tariffs. I don't think we're going to have like a trade war from Japan, South Korea, Vietnam. I think Canada, Mexico, we're going to figure it out. And China, of course, actually China does have cards. So the question is, if Europe, the EU has $600 billion of imports, and that's really where this is going to be a high stakes game, and the tariff is either 10% or 20. So it's, $60 billion. Does $60 billion justify taking $2 trillion out of the stock market today? I mean, that would be my first cut on why I think, even though it feels like there's a lot of bad news in front of us, at the end of the day, I actually think the U.S. is going to come out fine.
Tom Lee questions traditional economic indicators, arguing that metrics like labor statistics and inflation figures are often manipulated to support specific narratives rather than reveal the true economic picture. He points to the growing adoption of Bitcoin by governments, institutions, and the media as a sign of its increasing recognition, but stresses that this is only the beginning. Comparing Bitcoin's early years to today's widespread interest, especially with the spotlight on Bitcoin ETFs, Lee views this as a major milestone in the financial landscape. Lee also notes that major corporations like Apple, Amazon, and Google will leverage their long-standing relationships to quickly acquire large amounts of Bitcoin through spot ETFs, bypassing the complex process of buying the actual asset. This highlights the transformative impact cryptocurrencies are having on traditional finance. Michael Saylor emphasizes the need to embrace digital currencies as the economic environment rapidly evolves, encouraging investors to harness Bitcoin's potential for a more secure financial future. He points out Bitcoin's strong correlation with global liquidity, which remains supportive even during short-term liquidity squeezes, suggesting the market is poised for another significant upward move. Similarly, Bitwise CIO Matt Hogan highlights a dip-then-rip pattern where sharp pullbacks are typically followed by powerful rallies, historically delivering gains of up to 190%. Both experts agree that patience, not panic, is essential. What are your thoughts on Tom Lee's latest interview? How do you think Bitcoin's trajectory in the coming months will influence the crypto market and investing overall? Before we continue with the rest of the video, do check out Daily 5-Minute Crypto Newsletter with all the latest crypto and Bitcoin news. It's a fantastic analysis of on-chain crypto data and breakdowns, and the best part is it's absolutely free. They'll cover expert predictions, breakdowns of on-chain crypto data, and any breaking news you need to know, all in a nutshell. Click the first link in the description and enter your email to join over 50,000 others in becoming a better crypto investor right now. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.